Is NIO stock poised for a solid 2022? Stay tuned to find out why this analysis calls NIO an attractive buy for 2022. Hello folks, welcome back to the channel. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video from us. Without further ado, let's dive in. The decrease in NIO shares may perplex investors. The stock appears to be a good buy at its current price of $30. From the standpoint of price action and market mood, consider two key points. Before we go into the business principles, let's look at them. First, NIO stock went from being a penny company in 2020 to reach over $65 in February 2021. A 50% correction is hardly a concern after multi-fold returns. When NIO has used greater stock price levels to raise capital, for example. Furthermore, the greatest moment to buy a company is not when the market mood is upbeat. When the market sentiment is bearish, the markets appear unsettled. This is the perfect moment to invest. With China's EV industry projected to suffer a semiconductor scarcity in 2022, the stock is also corrected. In 2022, it's estimated that 1 million automobiles will be missing critical components. However, in the second half of 2022, supply chain problems are projected to subside. This issue, we feel, has been significantly discounted in the stock price. This is the greatest time to buy NIO stock if you have a medium to long-term investment horizon. NIO stock has a medium price target of $58.38 among 23 analysts who have given it a 12-month price projection. This implies an almost 100% increase in value from current levels. The most negative analysis price target is $37.74 on the downside. This supports our belief that the worst of the NIO stock slump has passed. Despite the chip scarcity, NIO reported great results in 2021. Although NIO's operating performance has been strong, with 2021 deliveries up 109% to 91,429 units. Furthermore, investors are concerned about China's regulatory crackdown on technological companies, as well as increased scrutiny of Chinese companies listed in the United States, which appears to be affecting NIO stock. However, there are a number of reasons that could improve NIO stock performance this year. To begin with, NIO's valuation appears to be highly appealing. The stock is now trading at less than 5 times expected revenues for 2022. According to consensus projections, NIO will grow revenues by a solid 75%, far more than Tesla. Thus, the lower multiple isn't really justified. Longer-term prospects are equally promising. This year, NIO is scheduled to expand its model selection with the introduction of the ET7 full-size sedan followed by the ET5 compact sedan, and there's a chance that more new vehicles will be introduced this year. With its international expansion, NIO is sure to make greater progress. The company entered Norway last year and wants to expand to 5 more European countries by 2022. NIO also plans to increase production capacity at its Hefei, China facility to 240,000 vehicles per year by mid-2022, which might boost volume growth in the long run. NIO's margins are also expected to improve as economies of scale improve. Due to a lack of demand, NIO was unable to sell 10,000 automobiles per month. For the time being, the company is still grappling with supply difficulties. This is a rather common occurrence, as we've seen with Tesla's early Model 3 ramp-up and other examples. Nonetheless, by the end of the year, the company intends to have a capacity of 150,000 single-unit shifts and 300,000 double shifts. NIO expects its second plant, which is set to open in H2 2022, to have a capacity of 300,000 yearly units. As a result, we anticipate a production capacity of roughly 600,000 by the end of 2022, early 2023. By that time, the business is expected to develop 4 main models: a full-size SUV ES8, a crossover EC6, a full-size sedan ET7, and a mid-size sedan ET5. NIO's intended lineup is almost identical to Tesla's current lineup. As a result, NIO could be Tesla's principal competitor in the next 2 years. Last year, NIO only made roughly $2.5 billion in revenue. NIO, on the other hand, sold fewer than 40,000 vehicles this year. Given these sales characteristics, NIO's average selling price (ASP) per vehicle was around $65,000. The company is expected to generate $9.5 billion in revenue in 2022. In comparison to last year, it appears highly likely that delivery growth numbers will be higher in 2022 and 2023. NIO has set itself up for success on multiple fronts. Most significantly, it has the financial means to carry out large-scale programs. The corporation had $7.3 billion in cash and equivalents as of September 2021. In terms of new model introductions, NIO hopes to start shipping the ET7 in March. It's a high-end electric automobile that'll go up against Tesla's Model S. Furthermore, NIO has launched the ET5, a mid-sized smart electric automobile. The car will go on sale in September and will compete with the Tesla Model 3. It's worth noting that ET5 has a lower price point, which will help NIO reach a larger audience. The down payment will be even more appealing thanks to NIO's battery-as-a-service arrangement. Customers can pay a monthly subscription fee to change out depleted batteries for fully charged ones with the BOSS subscription. As NIO grows into international markets, vehicle deliveries will also pick up. The company plans to enter Germany, the Netherlands, Denmark, and Sweden in 2022. By 2025, the company hopes to have expanded to 25 nations. NIO would face higher marketing and sales costs in 2022. The main reason is to enter new markets. This can have an influence on profitability at the EBITDA, earnings before interest, taxes, depreciation, and amortization level. However, we don't believe that this is a significant risk factor. Expansion, delivery growth, and operating leverage will be the focus of the markets. This is understandable given that NIO is expected to sell 135% more automobiles this year. However, the consensus estimates for next year's revenue increase are only around 67%. This estimate appears low, considering NIO is expected to have a production capacity of around 300,000 vehicles in 2022, while most analysts expect only 150,000 cars to be sold. In addition, NIO's two plants may be able to produce 600,000 vehicles by 2023. Despite this, average predictions for 2023 are only $13.7 billion, assuming production of only around 210,000 cars. These figures appear to be quite conservative, and they most likely underestimate NIO's production capacity. Furthermore, mainstream forecasts may underestimate China's demand for high-quality premium electric vehicles. We expect NIO will outperform consensus sales and revenue estimates by a significant margin. In my opinion, NIO can sell roughly 185,000 units in 2022, resulting in revenues of around $12 billion the following year, 110% year-over-year gain. NIO is expected to sell at least 300,000 units by 2023. In 2023, we may expect revenues of roughly $19.5 billion based on 300,000 vehicle sales. NIO is on track to sell around 450,000 cars in 2024, and its 600,000 unit objective is anticipated to be met by 2025. In the third quarter of 2021, NIO increased its research and development spending. R&D spending climbed by 101.9% to $185.2 million from the previous year. With the sector becoming more competitive, having a technology advantage is becoming increasingly important. NIO is well positioned to survive and grow because of increased investments in innovation and excellent financial flexibility. With these things in mind, NIO stock appears to be desirable following a significant pullback. In the following 12 to 18 months, we wouldn't be surprised if the stock doubled. NIO stock dropped 0.12% on the 7th of January 2022, closing at $30.31. The Nasdaq and the S&P 500 both closed lower for the fourth day in a row, marking the Nasdaq's and S&P 500's fourth consecutive negative session. The markets have had a difficult start to 2022, as increased interest rates and the Federal Reserve's tapering plans have put downward pressure on the broader markets. The Nasdaq has lost 5% in the first week of trading, indicating that tech and growth stocks have taken a hit. Please bear in mind that my projections are likely conservative, as NIO might build 600,000 vehicles by 2023. NIO could generate close to $40 billion in income by 2025. NIO could have a breakout revenue growth year around 2025. This spike is expected by other analysts. If NIO continues to perform effectively, we believe the stock will rise significantly in the next years. With this, we've come to an end. The content in this video is for educational purposes only, and hence should not be considered as financial advice. We all know that the crypto market is highly volatile, and by the time you watch this video, the prices would have changed to a whole new level. So all the financial decisions should be made after doing your wide spectrum research. Where do you think the price of NIO will go from here? Also, make sure that you like this video, comment down your thoughts regarding this video, and also don't forget to subscribe to our channel to stay updated about the latest crypto news. It'll help us grow immensely.